Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Friday, the 17th of October. Starting off with the S&P, and even though we're kind of in crash mode or being told that we should be fearful of that, so far it hasn't quite happened. We do have a double failure with the RSI just in the low 50s, which can be one of the most dangerous setups, so that is a negative, but we're still within the rising trend channel there from April. Floor of the channel there around the 65, 40, 50 level, which is basically post-September support anyway. And also we've got last week's 65.50 low as well. So while there's no end of day close back below 65.50, I suppose it's a buy on the dip and sell into strength, even though the RSI is suggesting the market is tipping over to the downside. On to the Nasdaq 100, and here the picture of also a market sort of hitting the highs there towards 25,000, coming back, but we're still within that rising trend channel, still above the 24,000 level. And while there's no end of day close back below 24,000 on the 50-day line, we are still hoping that this market will remain within a channel heading towards 25,800. If we do break down, probably the favorite area would be towards 23,800, the old August resistance and early September resistance for this market. But once again, not really expecting more than that. RSI has actually remained above neutral 50, even though we've had a couple of peaks in the upper 50s. Moving on to the stocks, and starting off with AEON, and here you can see that we've got a setup where the shares took off with an unfilled gap to the upside at the start of the month, and they've kept going. The top of the channel there heading for $2.20, and that's what we're looking for probably by the end of next month, given the current market conditions. And while we stay above recent support around the 105 level, ideally we'd stay above recent resistance at the $1.22 level, but that might be a bit too much to ask for. Another situation which we've been keeping an eye on is Apollomics, and here you can see that we've hit our third target, which was very nice. That was around $35. Above that, looking for, I suppose, potentially a fresh leg to the upside, and that would be derived from the resistance on the way down. In fact, it's actually derived from the old resistance and support on the way down at around $52. And looking for that by the end of next month, we can get through the recent $34, $35 resistance for this market. But keeping an eye now on the low 50s as a potential target for this market. Ideally, I suppose we stay on the right side of old resistance on the way down to the upper 20s, perhaps as a reasonable prospect there. Femasys is next, and here after hitting the top of the channel there, shares came back to test for support at the 50-day line. That is was around the 50 cents level. The view now is that while we're above recent broken resistance around 68 cents, we could have another retest of not only the top of the channel there at 93 cents, but maybe up to the 200-day line, 97 cents. Moving along to INVO, and here you can see that we've got the shares trying to regroup. Hopefully this time the break of the 50-day line will be more successful than the last one, but it already is. The 50-day line there at $1.03 above that. We're looking at the top of that rising trend channel base, around $2.75, perhaps as soon as the end of next month. But the key here, staying above that 50-day moving average. Next on the list is Lobo, and here we've got rising trend channel base again. Top of the channel there heading for $1.57, and we're looking for that while we're above the 200-day moving average, 92 cents. So reasonably simple setup, helped by the way that we've got at least double bounces for the RSI near that neutral 50 level. NextCure is next, and here another rising trend channel base, top of the channel there, heading for the $11 area, in fact $11.60. We're looking for that while we remain above recent broken resistance, just above $7 again. Double RSI rebound to start off the rally, and then another higher one to continue the rally. The next contender is coming up, and here we've got Personalis, and here see that it's a sharp rising trend channel, a little bull flag breakout there, and above the top of that bull flag there, around the $8.90 area, looking for $12 by the end of next month, or even sooner, actually, the way things are going, hopefully by the end of this month. The picture at Real Messenger are interesting in the sense of we're hoping that the shares will finally bottom out. We obviously had a full storm there through the 200-day line, but this time we've got the 50 and 200-day lines both rising. And we basically managed to clear that 50-day line at $2.75 above that, looking at the top of the nominal top of the channel there, as high as $4.30 by the end of this month. Moving along to REE, and here the picture is another rising trend channel base. Notionally, the top of the channel there, $2.40, and we're looking for that while we're above recent broken resistance at $1.14. Finishing off with hopefully with a bit of a flourish, and it is Sensei, and you can see that shares managed to break the first target there, the top of that channel there at $16. And we're now looking for a fresh leg to the upside, the upper parallel of that rising trend channel base from back in December as high as $23, and we're looking at that by the end of next month. The rally started with multiple RSI 50 rebounds, and that bodes well for ongoing gains for this market, especially while we're above the old March peak there, $15.20. That's it for me today. More updates over the weekend.